Mr. Kayur Vinci. So Kayur, is basically the product head retail and SME with Arca FinCap Limited. And Kayur also comes with, I would say, a couple of decades of experience, and he has a vast experience in terms of, working with institutions like Magma, EY, and, then coming on to Arca and leading the product there. Okay. So, coming back to the agenda where we had left, I think when I was just discussing about the morning call, and we had some sessions and deliberations among the panelists, it was decided that, we'll like to keep this in a round robin manner. So we have, certain inputs to be provided by all the speakers here. Before that, I'll just, like to summarize that where, we are sitting at in terms of what revolutionary approach we've been able to adopt. So as a country, we are definitely at a very, very better position as compared to 4 or 5 years back if we go in terms of our credit adoption or credit penetration, although among the largest ones to grow, and also similarly the largest ones to be adopted onto the credit penetration also. So if I just compare this, the Indian stats with to that of bigger economies than us, so we're sitting at 14% penetration in terms of our MSME credit. We are still at 11% in terms of retail. And, there have been some key drivers who basically has helped us to grow more than 12x between, 2017 till date of what we are. And this rapid growth has not been, would have been possible because of some standard initiatives. But that is where we come forward in the webinar to discuss around that what has been the revolutionary, initiatives which we have taken about this. There have been some strategic developments for, creating these opportunities. And I think this entire ecosystem which India today is sitting at, which has a fintech penetration, which has the digital adoption by the lenders on the other side, is two parts of the pillar. But there is another pillar which, adds to the entire, which is the entire ground masses of the country. And there have been certain, socio-economic factors which have contributed this. We've seen rapid increase in employment sectors. We've seen rapid increase in banking as a service to be provided in terms of the access. We have one of the largest, smartphone and internet access globally. In terms of our public infrastructure, which we will be discussing during our further deliberation, we are, I would say, one of the leading economies to adopt to public data infrastructure. And I would also suggest that, the demographic trends and needs are also, changing. And we as Indians, we are going more tech savvy in terms of, our banking demands. And when we look at why digital, because, we've been sitting at a huge trail of data, which today is being, being harnessed through technological solutions, because data being the most crucial element in this entire digital lending as an economy, we definitely are in the forefront of, becoming the masters of digital lending globally. And not, I would say last but not the least, definitely is our rise in the credit demand, which basically, is with regards to a demand in specifically on small ticket size loans, because earlier mid and large cap of the economies were definitely, dealing, but the rising demand from the MSME sector and the retail sector, which, has truly become the backbone of this entire ecosystem which is coming up in the industry, has, certainly helped a lot to all institutions and stakeholders of this, entire session as a whole. So I'll quickly jump towards, my first panelist, Mr. Shirish Salve. Sir, would like to definitely understand that, what do you think, since you've been very close to, the government initiatives and being there with the public sector bank for over 2 decades, how do you think that, government initiatives have been able to play a pivotal role in setting up the base, and now a pivotal role in terms of setting up the future steps for digital lending in the country, sir?
Okay. Thank you. Thank you, Shashank. So, very good afternoon to all the viewers of this webinar. So, it's really a pleasure to speak to all of you on this very important subject, that is digital lending, how it is going to shape in the future for India. Okay, so as we have seen in since last 1 decade, means we can say since the post election of Prime Minister Modi. So that is the turning point. He got elected as the Prime Minister in 2014, and somewhere around financial year 15-16, they come out with the Mudra scheme.
Correct.
Mudra was earlier was means in some other form was there in the Congress government also, but when Modi came to power, he reshaped the whole concept of the small loans to MSMEs, and Mudra came into the picture. So from that point on time, we have seen the continuous efforts strategically and a deliberate attempt by the governments to improve the financial inclusion, mainly in the sector of lending. Okay, so the major highlights means the all the steps governments have taken. So central government has started this initiative, and then slowly we can see the state governments also following the steps. Okay, so one of the major initiative government of India or the regulators have taken, you look at the account aggregator infrastructure,
Correct.
the account aggregator framework. So what RBI has done with account aggregator. So when the concept came, so I was there, I can remember I was there in the meeting I attended in somewhere in 2015 or 2016. When this concept was first discussed, they called all the banks and they have formed a team. So everybody laughed at what IBA was telling the banks. So all public sector banks, private sector banks, everybody. So why would anybody share the data? So ये मेरा customer है. I only need to see what is this nonsense like. This was the first reaction by everybody, from everybody. But see what has happened to account aggregator. So this is the one of the major initiative of government of India through RBI. They have, of course, they are implemented through RBI, but this is a great success story. Now we can see the impact of account aggregator, and again they followed each and every stage which are required. So our Data Protection Act was not there in place when this account aggregator framework has come, but so the vision of the authority, the regulator, it was there since beginning. So even though this Data Protection Act was not there, whatever provisions are there in the DP Act are already covered in the account aggregator framework, like the consent-based data sharing.
Right.
Right. Then I have a list here. So then comes the Open Credit Enablement Network, that is OCEN. So now this also, when we think as a banker also, or as a technocrat or technology provider, you also. So now see this, they have defined this, but definition से ज़्यादा पता नहीं चल रहा है. So ultimate aim. So I had a discussion with somebody from the DFS. So ultimate aim, what they are aiming at through this OCEN, that each and every customer point, each and every touch point, customer touch point, like be it a Kirana store, be it any other shop, or this wherever customers are reaching, going for their daily needs or whatever purpose. So every touch point, customer touch point, can be a lending point. So this is the ultimate goal they have set. So it is not coming out in the documents what they have the scheme what they have given, but this is the ultimate goal they are having. So loan चाहिए तो कहीं भी कभी भी मिलना चाहिए loan. This is the purpose. Then we can see some things which are government efforts government is taking, and some are there are very aggressive and innovative regulatory bodies also, like RBI is there. NPCI is also coming out with very innovative things, like see an example of credit line on UPI. So again, the success of UPI, now you can see everybody want to work on the UPI platform. So so this is that now we have run UPI for almost from 16th we have we have started almost eight years. We are working with UPI. Now everybody is realized that now this is the time to get most of whatever we can get out of this handsomely built platform called UPI. So credit line on UPI is one of the good initiative by NPCI. So always backed by government. Then RBI as a regulator also is not far behind. So they have drafted a separate lending policy for as a digital lending policy. Earlier, RBI had a lending policy, but they have come out with a digital lending guidelines, not policy. Policies for each and every bank. So as a regulation, they have drafted the guidelines, and they have come out very clear to the lending institutions that what exactly is to be done as far as lending through digital platform is concerned. Then there are some initiatives like CBDC. It's not related to lending, but some kind of advanced related things can be done through CBDC also. So what we are seeing here is that it is a complete evolution. Okay, and it is not only about technology. So through the technology platform, we are trying to build the trust between the lender and the borrower. So that is also a very important thing. And accessibility of the loans is the main purpose and main goal which we need to achieve through this digital lending things. So state governments, like there are some good state governments who are technologically very strong, like Andhra Pradesh government is doing very good in technological advancements. So is Karnataka government. You can see what they have done for the Kisan loans. So they are the first state to have all the data, required data digitized, the farm loan data. So whatever is required for providing a farm loan. Then Maharashtra government is also not behind. So state governments are also contributing in a big way, following the steps of central government. So that's how government is means helping the banks or helping themselves or helping the citizens of this country.
Perfect, sir. I think that's where I set up this as the first question here, because you very rightly laid down the entire foundation for the discussion to proceed ahead, because right from starting on Mudra days, we are now sitting at Mudra 2.0, where the limits are getting enhanced from 10 lakhs to those of 20 lakhs. The government has already announced this. Account aggregator, you rightly mentioned that while it was getting conceptualized, nobody had a thought, or I would say a visualization that how this would work in the real time scenario. But I think off lately we are sitting at somewhere close to, we're about to reach 150 million accounts being linked to the framework very shortly. That's a huge adoption in terms of the retail segment, while we are still trying to solve certain bottlenecks on the MSMEs front. And Oaken, very rightly mentioned by you, is another key fact, which is helping the entire ecosystem to set up the digital footprints, to have some digital data in terms of reaching out to the last mile on how that can be made possible. And of course, yes, other initiatives like CBDC and rightly mentioned, which are also shaping up. And I think I'll come back to you with a more deliberate question of that. Meanwhile, I'll switch to Subhash now. So Subhash, coming up from your tenures with two of the largest and fastest growing banks, how do you see that? What are the key trends which, as per you, are shaping the future of the digital lending in the country?
Uh, Good afternoon, Shashank, and team. Good afternoon to my co-panelists and to the wonderful audience who are part of this webinar. And first of all, I would like to give a big round of thanks to the ScoreMe team for giving us this opportunity for having this wonderful webinar. Coming back to on my topic and on the question that you have raised, what I see as a future of digital lending in India. Well, I would like to break this into two cohorts. One cohort that I would like to look at is uh, the lower ticket size kind of funding or lending that currently happens, whether it happens on the retail side, whether it happens on the SME side. What I have seen in the last 2 to 3 years is this space has really grown up. What we have seen is that we have pivoted from the traditional financial based lending to more of cash flow based lending. Obviously powered by the regulators' push towards taking up account aggregator, which has really done well on the retail side. Also, there was a pivotal journey which the government has done starting from 2017, wherein GST was introduced. And post that, we have got a substantial chunk of data from GST, which is frankly rewriting the whole underwriting model for us.
Correct.
Apart from this, what I have also seen is in the last 4 5 years, the bureaus have also upped their game. There's a lot more data which is much more intuitive, much more helpful for us to take a risk-based decision. So what I have seen is in this cohort, almost all lenders, whether it's banks or NBFCs, they have some stronghold. In fact, at Yes Bank, we have a specific product called as DGOD, which looks after this cohort. Which is completely digital, powered by the digital public infrastructure which is available in India. So you have got PAN, you've got your GST APIs, you've got your banking APIs, you've got your GST APIs, you've got e-sign. An entire structure is end-to-end digital. What we can truly claim to the customer as end-to-end digital. So this will be first cohort. And what I see is as a future for this will probably increase more from a SME perspective. Currently, this is much more active or much more vibrant for a retail individual kind of a guy. From an SME perspective, I think this will be much more going. I think account aggregator has an important role to play over there. If more and more SMEs get onboarded onto account aggregator, I think that this is the next low hanging fruit that we have. While I would like to also pivot to my cohort 2, which is our traditional lending, which is nothing but your collateral backed lending or say a guarantee backed lending. Even in this, there's an interesting approach that I am witnessing. So traditionally, this was being taken care of by experts, by SME experts, by underwriting experts who used to understand that business. So a relationship manager used to have an expertise of what that business is about. If I'm doing an SME kind of lending, I would be needed to necessitated to have an expertise on that. Similarly, my risk counterpart will be necessitated to have that expertise. And we would be writing long, lengthy CAMs. Each case would take us about anywhere between 20 to 30 days. Any case processing would take about 40 days. You'll be surprised to know that in most of these banks, this has got crunched to 2 to 3 days. It is because of 2 to 3 aspects. First aspect is the availability of data, from what I have already cited. The second is the CAM writing itself. I think a very important pivot which has happened is AI-based CAM writing. So there is a lot of intuitive feedback which comes by AI itself, basis triangulation of data. So we get financials data, we get banking, we get GST. So human mind, if it might have missed out something, but this AI brings it everything onto you. So it's much more of an enabler for an underwriter and for us to take a quicker decision. So these are the two key trends that I look at, which will develop in the coming future.
Well, very rightly placed, Subhash. I think so. You've very, I would say, fundamentally divided these two segments of, the lower ticket size and slightly a medium ticket size. And Yes, to agree, GST was definitely I would say a considerable change which had brought about in MSME lending, and we're looking at a, I would say much comprehensive underwriting, but at the same point, much faster as well. So, that's definitely taking up. And the one point which you mentioned around, the use of AI to reduce your TAT, and I would say, in fact, improve your efficiencies on, I would say, secured lending products, that has also is looking at I would say a key trend in terms of this. I will touch base in continuation to these questions to you. uh, well, I'll take the stage towards Kayur. So Kayur, we've talked about government initiatives, we've talked about GST being introduced, and a lot of data around MSMEs being available now. If I club the government initiatives and the cash flow based lending based approach, but how do you think that, how confident today the institutions are in administrating the credit through a cash flow based lending approach? And do you also see that, there can be, more to done in terms of establishing this trust going forward?
Right. First of all, thanks Shashank and the Surgeon team to have me on this call and share my knowledge and insights with the audience here. Uh, I think the topic is critical as well as very timely. In today's time, I think a lot of work has been done by the government and the regulator in terms of bringing out the right set of guidelines, right set of infrastructure, so that the lenders can reach out to the right set of customers to deliver the lending solutions, right? Just on the cash flow based underwriting and the lending that is done by the banks and NBFC, I think it has become a mainstream credit assessment model now. 5 years, 10 years back, I think it was something very new. Uh, if I talk about Arca, I think more than 80% of our customers we are onboarding just based on data, based on cash flow based analysis. And I think not just at Arca, I think there has been a noticeable shift in terms of how the other lenders are looking at customers, right? We are seeing a shift from financial based underwriting to a cash flow or a banking or a GST based underwriting. Uh, of course, the technology has helped in terms of ensuring that we achieve this, right? But we see a considerable shift now towards a cash flow based lending. Uh, the ability to evaluate a customer basis a real-time data of banking and GST, which is now available through a double A solution, is ensuring that the lenders lend to right set of customers, also lend them very quickly, right? So it has helped in both ways in terms of finding the right set of customers and then giving them a solution very quickly, right? However, as you said, there are still a lot of areas to cover. We have still not reached a stage where we can say we are able to lend to all the underserved segment within MSME. I think two or three steps which will really help provide a fillip to this cash flow based underwriting is one is we need a far more higher push from the regulator on double A, right? The kind of push we have seen from the regulator on say NACH or UPI, that was a very different scale, right, compared to what we have seen on double A, right? So one is a far higher push and backing from the regulator. Second is we need a awareness among the borrowers, right? There is still not awareness at tier 2, tier 3 towns or tier 4 towns in terms of what is the benefit that they can get by taking the entire data digitally, right? If they move their entire cash business into a banking or a GST based data, right? What are the benefits that they will get over time, right? I think that awareness has to come either through government or through lenders or through regulators, right? And I think the third aspect of was to have a right infrastructure in place to have all the data points together, which I think Double A is trying to do, right? If I want the entire tax data, GST data, banking data together, right? And I want to see a triangulation of all the data to identify a right set of customers. I think that will really help lenders in terms of reaching out to the expected underserved segment of MSME, right? So that's largely the 3 points in terms of borrower awareness, good regulator backing, and having a robust data infrastructure. That should really help in terms of providing the right adoption and fillip to the cash flow based lending, right? And I think with right push, this can really be the backbone for MSME lending in India.
Well, Kayur, I think very summarized, in terms of how this cash flow lending can be adopted. But, just a very quick follow-up on this part that, uh, we talk about awareness and we talk about, the push from the regulator.
Good.
But, monitoring your day-to-day, activities and the feedbacks which are coming from the team, that do you expect that, the end users are, I would say, in line and they understand in terms of that, this data sharing is going to help them in setting up that trust and getting the timely credit, or there is still some, gray area there? That's number one. And, number two would be that, I'll also like to touch base upon how, the underwriting towards new to credit customers, because, we've talked about customers who have some digital presence and customers who have, some ground level footprint data available. But, let's also try to focus about how a new to credit customer today, can be onboarded as a part of this process. So, any thoughts on how this can further be improved?
So I think coming to the first question on how do we ensure that the cash flow based lending really has the impact for the borrower as well as the lender, right? I think it can be a game changer for MSME credit for sure, right? And one of the key benefits for the lender and borrower can be how can I identify a unique customer who fits into my policy basis that data-based or a cash flow-based lending, right? And how can I lend him faster, right? And I was talking about the awareness part. For the borrower, can we provide that awareness and the benefit? How can we portray that if you are maintaining a right set of data, then you will be eligible for certain type of loan in a certain time period. And I think Subhash spoke about the TAT part also, right? That digitization has really helped in terms of improving the TAT and ensuring that the solution is available to the customer very quickly, right? And importantly, I think cash flow can really provide a consistent and auditable insights for for the lender, right? It can really give you the idea in terms of what is the real business health is for a MSME. Even if so, the problem with entire financial based underwriting was that the data was always dated, right? If I am doing underwriting right now on 23rd May 2025, right? The latest data that is available to me is 31st March 24, maybe, right? So that is at least 14 months away.
Correct.
That 14 months would have well, we have seen the world 14 months back, what was it and what is it now, right? So that really does not give us insights in terms of how the borrower has changed, how the industry has changed, how the cash flows have changed, right? So those kind of real live data that what cash flow can provide is very different compared to financials. And I think all the lenders are seeing that benefit and they are seeing the transition that is happening through AA or through solutions that are available through, say, ScoreMe also, right? In terms of they are really seeing that benefit, right? Uh, and I think this will definitely help us widen the formal credit base that we have, right? There are still a lot of scope to work on serving the underserved and unserved segment in MSME, right? And this digitization and cash flow based lending should really help us in terms of ensuring that that gap is filled, right? And the one thing that will definitely help lenders is that it will help them to innovate on new lending products, right? All of this data that is now available through AA, that should help us develop new products over time in terms of helping the MSMEs grow. Just to touch base upon your other point on NTC, right? It continues to remain a slightly complex and cautious exercise, right? Banks are still not very friendly in terms of ensuring that the NTCs are served, right? Uh, and I think there are valid reasons for it. They are not wrong in their own way, right? The data sometimes, when you look at the overall NTC data, it does not look bright. For sure, it does not look bright because there are delinquencies, and I think no one denies that. So I think what can really help is in terms of identifying the right cohorts within the NTC segment, right? How do we identify the high performing cohorts within the NTC by looking at the early payment behaviors or early data points, right? We saw a lot of fintechs came up, right? Those app-based journeys that came up, they gave the small ticket loans left, right, and center to this NTC segment, and we have seen the result, right? The industry has seen the impact that it has. The RBI has seen the impact. So that is not the right way to grow. The right way to grow is to identify the right cohort, right set of data, leverage the AA ecosystem to the maximum extent, look at the savings data, and then lend basis that, right? If you are able to differentiate a high potential NTC cohort and borrower compared to a high risk one, I think there is definitely a business case to lend to NTCs, right? The key part is, of course, to identify the uniform and the right group that can be lent, right? And the segmentation based approach is the way forward for the NTC. The carpet bombing that we saw in last 2 years through app-based lending is not the approach, right? So I think there is definitely a business case for NTC, and I think with database models, I think we will have a breakthrough very soon.
Sure. So, Kayur, since we are running live on a pan-India basis, so any specific cohort which Arka has identified, and you can probably
I think we
leverage the platform here.
so I think of course the models are very Arca specific, but I think with data I think we have seen we have taken help of Bureau also here with right location set with right set of data from AA that comes. I think we have been able to cater to NTC segment as part of the overall cohort, and I think it has turned out well for us. No, I mean, it has not turned out to be worse than a normal course of lending that we do to a customer who is a regular customer in terms of maintaining the financial and banking, right? So our experience has been well and good on NTC side.
Sure. Very good to hear that, that you are also trying to solve this NTC problem, which, continues to be, definite, I would say, a topic of deliberation. But yes, I think with more efforts, we can go more deep into this. Thanks again. Thanks for your inputs here. I'll, come towards the end session with you now.
Sure.
So Subhash, just, routing the discussion back to you. Kayur mentioned around that, and you also mentioned in your initial remarks that, there's a uplift which has come in the CIC, as well. And also, on products like DigiOD, which Yes Bank has launched. In terms of, we've talked about the policies and we talked about the lenders. But again, we know that digital lending ultimately, is more of a collaboration effort rather than being an individualistic effort. So how do you think that, collaboration between fintechs and the traditional banking practices, are trying to gauge upon and setting up the right set of solutions which can serve the masses at which, and the scalability at which it is required in the industry today?
Thanks, Shashank. Interesting question. And to be very frank, I think both fintech and banks need to work in consortium. Okay. And I'll tell you my reasons for that. Banks will always come with a traditional underwriting mindset. Okay. The availability of an alternate data and an ability to have that data modified and tell you which customer to look forward to lend is something which the fintechs really bring forth. That's point number one. Point number two is the reach aspect. A lot of these fintechs help us reach a lot of wider audience. Traditionally, banks will be looking at lending somewhere close to their branches. So 25, 30 kilometers around their branches, surrounding their branches would be my lending space. But with the help of these fintechs, what we have seen is that the reach for us has really widened. Third aspect is cost efficiency, which these fintechs bring in. Okay. What I've seen is that the fintechs are much more nimble in terms of their tech aspects, and they're able to, the time to market for any application to go live or for any new regulatory related changes that needs to go on live is much more easier, much more faster with a fintech being there. So fintechs have really played a very larger or important role in building this. At the same time, I don't feel both fintechs or banks can't survive without each other. They are dependent on each other much more. And in fact, you would be aware, we as a bank are one of the most forefront private sector banks which work along with fintechs.
Correct.
So yeah, so most of our, whether it's our lending product, whether it's our liability product, we have partnered with lot with a host of fintechs and are providing top-notch products for the customers.
Well, perfect, Subhash. I think, and I would, request you to continue this endeavor of, I would say the collaboration model between the banks and the fintech so that, the industries can grow together. And definitely, looking forward for much more products being introduced in this space. And, we've been discussing around the NTC segment and the cash flow models and use of, data around the segments. From a fraudulent perspective, do you think that this also adds up and a problem is getting solved by default in terms of if users are today adopting more towards a digital solution, so the banks have to stress less towards frauds becoming it? Do you see this as a pro, or do you still see this as a con where the system can still be breached upon and there are certain guidelines or practices which still needs some deliberation there?
I like to answer it into two parts. The part number one is how does it actually help a bank to assess? And I'm trying to probably reveal sort of a secret sauce for the audience over here. But it's not something very secretive. I think everybody knows it, but much more important for our SMEs or our retail customers to know about this. More entries in your bank transaction, more likely more likely the chance that a bank or an NBFC is supposed to lend you. Earlier, what used to happen was we were majorly cash economy, but since mid 2020s, wherein we pivoted to UPI, which was the biggest enabler which the government has given to us. What we have seen is lot of receipts of earlier cash collections are now happening via UPIs, and that in turn is building up your bank balances. That in turn is building up your churning, and in turn builds up your credit profile as well. That's point number one. Point number two, I think most of the customers, whether it's on retail side, whether it's on the SME side, are now much more aware that your credit information companies, CICs, are very important, and hence your behavior with your existing banker, whether it's on cards, whether it's on loans, be it any other product, has to be optimal if you want to grow your profile. What I have seen as a trend is the adage start small, build big. So most of this SMEs or retail customers start with small loans and then gradually build a digital credit profile, improve their long-term profile, and then improve their creditworthiness.
Sure. Thank you for those inputs. I think I can definitely put this as a common question to everybody now. But before that, I'll move to Mr. Shirish. So Shirish sir, I think looking at what Subhash and Keyur has added towards the MSME segment and the NTC segments in terms of their adoption on digital. I just have a question which would basically take attention to a different topic, which is on the ETB customer base today, which is sitting with the public sector banks today, sir. And I think we're sitting at a huge number of existing customers in retail and MSME segment with the bank. And before we, as a public sector bank, you build a solution for NTC customers or maybe new to bank customers. How do you see that these digital lending solutions are reaching to the last mile of your existing database within the bank, sir? And any products you foresee being launched to, I would say, encourage these customers to come forward and get back to those transactions with the banks on which they have been operating for multiple years now?
Okay. So, existing to the bank, as you rightly said, bank is sitting on crores of customer accounts, the customer data uh, with them. What we can see in any general, in any public sector bank, there are 12 public sector banks now. Suppose if you look at the numbers, the total depositors count versus total borrower count. Okay, so it is around maximum around 20%. So it is different figures for the private sector banks, but for public sector banks, total customer base 80% are depositors, 20% are borrowers. So now this is going on since long, and in public sector banks, unless somebody comes to you and asks for a loan, the bank is not never going to ask whether you want anything. So they were happy that Bajaj Finance is financing the customer to buy a TV, and we bankers were very happy to fulfill their EMI requirement, wherein some installment will come through the NACH and will very happily process that, and that's what we called customer service. Okay, so now with all this with account aggregator and the online lending platform, the digital lending with the when the avenues opened up, so now slowly as a public sector bank started realizing this. It's not that they were not aware about it; they were very much aware, but uh, like contacting each and every customer and how to touch upon the customer, that was a huge task. So this digital digital lending thing has eased that out for the public sector banks, that particular area. So as you can see, most of the banks have already taken up this transformation program. So if you go through the various banks websites, some or other banks is going through a digital transformation program. They appointed some consultant, they're guiding them to do the transformation. So this is one of the, and under the transformation program, this is one of the major pillar of the transformation program, how to use the existing customer base to uh, actually to explore the possibility of lending to the existing customers. So the words are going on since long, that cross selling, upselling. They always talk about that, but it has never happened in the real sense earlier. But now comes the account aggregator. When any public sector banker look at the account aggregator data, so how much account information we have fetched and how much account information we have provided. The ratio is 1:1000. So we have taken data of one account, whereas we have provided information about 1000 account. So now this is an eye opener for everybody. So everybody got surprised to know this when we opened up for this account aggregator. So we as a public sector bank also started working on that. So first step is that look at the internal data. So we call it activate the internal data and work on the smart underwriting on that internal data, whatever is available with you. And the second point I would like to mention is that development of digital journeys. So there are multiple times attempts were made, but now time has come, end-to-end digital lending journey. So since beginning till the disbursement, documentation, everything has to happen digital. So earlier it was very difficult for a bank to think about this. Okay sir, sanction tak to okay hai, but disbursement be digital sir, thoda एक बार तो कस्टमर आना चाहिए ना ब्रांच में, कम से कम एक बार तो चेहरा दिखना चाहिए. So now gone those days. Now they are not thinking like that. They are thinking differently. If somebody else can do this, even the big public sector banks already started doing that. But slowly, or we are ready for that. As of now, we can say we are ready for that as a public sector bank, and this data can be utilized. Then I spoke about the Ocean earlier in the beginning. So this is the open API platform, and is working towards access to the access of credit to the customer at touch point, all the touch point, customer touch points. So this also banks can think of partnering with platforms like Ocean, which are open API and open protocol based platforms. So this also can help them in achieving this using their own data and doing the credit. Then one of the most important thing is that what can be done, and banks are doing that, is the pre-approved thing. So pre-approved is the one of the major means. Many banks already done that and got a very good success in pre-approved loans. So we also very much see. So even if I also receive so many messages, I got no connection with Tata Capital, means never had any relationship with Tata Capital, but I receive a message from Tata Capital that I have a pre-approved loan of 25 lakhs and it can be yeah, so something screen went blank. Okay,
You're audible, sir.
yeah. So the pre-approved is the one of the major, we can use it as a tool, the pre-approved loans. So the data, amount of data we are having. So a lot of good customers are there. Like we have not given loans, means we have not approached the customers also. So there are so many thousands of lakhs of customers are there, wherein a customer is having worth like he can, if he go to any bank and stands in the banking hall, his loan will be sanctioned. Customers are like that, but till now, because he has not asked us, we are not given him the loan, and we are serving his loan installment. So now realization has come mainly to public sector banks that, and things are starting up.
Perfect, sir. I think so. That's where Kayur and Subhash, growth is also getting linked to that, with public sector banks activating their internal data and launching pre-approved campaigns will, definitely be an eye opener for your existing customers. And very interestingly put up in terms of your double A stats also that, it's 1 to 1,000. So, now you know that where that 1,000 is going. So we probably, we were sitting in the right forum where we have a private banker, we have public sector bank, and we have a growing NBFC. So, that rightly puts up. But thank you for your thoughts, sir. I think we definitely see more digital journeys, coming up with the public sector banks, and especially Bank of Maharashtra has been in the forefront of, having these digital journeys, which are end-to-end digital for their customers. And thank you for those, inputs. I think your existing to bank customers will definitely see a growth, or I would say change in how lending is to be approached. Well, so Subhash, coming back to you, just, quickly, we are almost towards the last end of our discussion. Shirisa mentioned around having end-to-end digital journeys and an approach which is taking the bank towards a digital lending platform. So I just wanted to, basically put this question as a comment to everybody for their closing remarks, that we've talked about digitization at the, regulator level. We have talked about digitization at the source level. We have talked around policy makings and digital policies around lenders level. And to an extent, we've been able to touch base on, how the awareness has to be spread and how these cohorts have to be worked out. But, do you still think that all of this needs a more stitching on a collaboration on a single end-to-end digital lending platform? Because, we're talking about an era where we have e-stamping, e-signing, e-NACH solutions, which were the major blockers in terms of processing of these loans digitally. So do you think having this approach is the right time for us to think around creating a collaborative digital lending platform, or do you still think that we are maybe some time away from creating an end-to-end platform, but we can still focus on certain segments or products internally which are completely end-to-end digital? So we can start with you, Subhash, and we can probably have a minute and a half, quick 2-minute closing remarks from each one of you.
So, Shashank, I think now the time has come to have a collaborative, comprehensive digital lending platform. I think everything is there in place. We just have to stitch up one stack. To be very frank, lending products do not differ from one another. It's majorly you are going to assess the customer. One is the customer profile. How is the customer doing? Second is about his business or about his profession or his work, what he does. So I think all of this can be embedded into a single comprehensive digital lending application, and it helps also because let's say, for example, a customer, an SME customer comes in and he wants lending for his business. At the same time, he might also want a auto loan to be given to him in his personal capacity. And we are taking the data for that individual in my SME lending, but can I do something about that data and give him a pre-approved offer on the auto loan? The answer
Very
is
right.
probably to that is yes.
Got it. Perfect. I think so. Cross-selling with regards to, me being approaching the bank for product A, but the bank, basically being more insightful around my data and providing me help with product B, that's something, which is interesting. We can.
Yeah, I think most banks and NBFCs are pivoting from a product approach to now to a customer approach. So, hey, this is my customer. What all are the book?
I think there's some lagging there.
Sorry, I was trying to say that from a product centric approach, we are now pivoting towards a customer centric approach. So now, once the customer walks in to a bank, whether he comes physically or digitally, we are now not looking at to sell him just one product, but a whole bouquet of product and trying to capture his whole mind share. Now that is truly happening in 2025.
Perfect. Thank you. Thank you for those, closing remarks, Subhash. Keyur, your thoughts around taking a collaborative digital lending platform approach, or do you still think that, templatized products should be still the way forward?
I think what gives us right signals that how digital lending has become important is you have to look at the kind of guidelines that the RBI has come in last 3 to 4 years, right? We have seen so many revisions, so many additions, subtractions, right? I don't think even KYC policy has changed so much, but the digital lending guidelines have changed 3, 4 times in last 3 years, right? So that is the kind of focus that has come on digital lending. And I think RBI was right to bring in the consolidated guidelines very recently, right? Uh, uh, so in terms of the marketplace like experience that they are talking about, right? In terms of purpose specific consent, so they are talking all the right they are talking all the right notes, right? In terms of what will enable the digital lending, right? It is no more about a tactical compliance or a tactical business now, right? It is not a small thing anymore, right? It is a very strategic alignment that a lender has to take now when they collaborate with a fintech. I think the new guidelines are definitely a right step in terms of taking the digital lending to the next step. Um, Hopefully, all the lenders take it in right spirit, and I think that should help us achieve uh, the target of RBI in terms of reaching the right segment, right? So I think focus has really shifted from a tactical compliance to now a strategic alignment between a lender or NBFC and a fintech, right? And I think that is the right way ahead.
Perfect. Perfect. Thanks for those inputs, Keyur. Shri sir, moving on to you for the last closing remarks. Collaborative digital lending platform or templatized products individually. What's your take?
So there is no single solution for all the problems. So it has to be multi-pronged approach. So your DSA is not going to go anywhere. So DSA will always remain there. Then you are having a digital platform, bank's own digital platform, bank can have their own digital platform. That is one thing. Then simultaneously, we need to have the partnership with fintech companies uh, and the platforms like as I already mentioned, like the open API platforms like Ocean. So the infrastructures which are built for this particular to address this problem. So all these has to be done simultaneously. Just by doing having a digital lending platform, and I will not have anything else. Only I will have digital lending platform that will not serve the purpose for which you are there as a bank. Okay, so impactful solutions. We do multiple things, and we see the impact. If we get the impact right results, we carry on with that, or we give it away. We stop doing that. So I'm actually mentioning this Ocean 3-4 times. So what I see in Ocean, this open API platform. So I can see that if it is implemented properly, no, and adopted properly by the customers. So what anything you talk about digital lending, we people sitting at Mumbai, Pune, or Delhi, or Gurgaon, the metro cities, even in the urban cities, A class cities, we see that what is to be done. This is already happening. That's what we think, right? What
Yeah.
special we are talking about. So now this platforms like Ocean can take this same thing to the tier 3, tier 4, tier 5, tier 6 kind of locations.
Got it.
So where a loan will be available in a kirana shop. So it is available like embedded loans. We always see the embedded loans, like when we check out from Amazon and it is happening. Same time you are getting a loan approval there itself. Okay. So
Perfect.
if implemented and adopted widely, this Ocean-like platform, I'm not talking only about Ocean. Ocean-like other platforms also can do wonders to this credit.
Sure.
It can be have similar impact what UPI had on payment systems.
No, that's a bold one, sir. That's a bold statement. But I definitely, I would say would like to relay this information as well, that I think adoption to Open and other platforms is definitely, and we also kind of looking at uh, we're trying to create a more collaborative platform overall as a whole. And just taking these thoughts for a closure with regards to how this entire lending as a practice is to be followed. I think a more collaborative approach is something which is required, and we also need to look at systems which today can help the industry to shape up. And we'll like to continue our discussion offline as well, and if there are any feedbacks and questions, we will definitely be reaching out to all the panelists. With regard to summing up, I can definitely say that we able to set up a government policy initiative discussion, followed by awareness discussions and adoption of digital lending platforms and practices as a whole. And I think now in almost every week we'll be coming up and touching up on a new topic. And next week we are discussing around unlocking new underwriting models. And in the June we are planning a major one on unified lending interface as well, because ULI is also coming up in a big way. That's one specific reason why that was not in agenda. So we are doing a full webinar on ULI next month. And RBI is also, trying to, I would say, shape up their entire policies. So we'll try to bringing the latest from there as well. Once again, thank you everyone. Thanks for being a part of this panel today. On behalf of ScoreMe Solutions, I'd like to humbly thank you for sparing your valuable time and insights with the audience here. And thank you so much. I think we can sum up. We have already crossed the time barrier, but there was a lot to be discussed, but still we can continue it in the forward discussions. Thank you, everyone.
Thank you, everyone.
Thank you, Shashank.
Thank you.
Bye.
Thank you very much.